Uh, Before I forget, can I just dispel one rumor about the business plan in the banking community? We don't adhere to the policy of the bigger and fatter and prettier the business plan, the better. All we want to see is that you understand the business that you're going into. So please don't try to make it all pretty and everything. Let's just get down to the numbers. Typically, the prettier the business plan, the tougher the deal. So just give us the facts. No, we don't need that. But from a capitalization standpoint, again, I'll piggyback on what they were saying. It really is very industry specific. Businesses like manufacturing companies that have heavy AR, heavy inventory, heavy fixed assets, high volume, low margins, they require a closer debt to income ratio, $1 of debt to $1 of equity, borrower equity. But conversely, a deal like a sub shop on the corner leases their space, no inventory, no receivables. They can leverage up a lot higher than a manufacturer. So you might have $4 of debt or $5 of debt for every dollar of equity. But there has to be that equity component in the business. But it is very industry specific.
The collateral and capital requirements of our loan programs are fairly flexible. We have no set standard for what an owner must put into the business. We look at the overall idea, and a guiding principle for us is whether we'll get repaid, whether the business makes sense, and whether the numbers make any sense. But we don't require any specific equity infusion. And so we're different from banks. Mm-hmm. And we tell our loan committee quite often that we are not a bank. Okay, our goal is to provide loan opportunities for small business people, both new and established, to expand businesses in the empowerment zone. Mm-hmm. Okay, so we're not a bank, but we are a lender, a micro lender.
So, is there capital available? I mean, I hear Sherman say, you know, there's loan that their loans are not necessarily strictly done on the merits of the business plan necessarily, but whether or not you can get paid. But is there capital available out there, and what kinds? What are the different programs? So you guys may speak a little bit to the different programs that are available, and maybe Nikki speak to what you're seeing your clients do to gain additional capital.
Okay. The Urban Leagues program is one of the few in the city that continues to provide loans to small business people, primarily in the empowerment zone, but also in Greater Knoxville. I think as a general categorization, one could say that loans to small businesses have dried up, just like loans to all businesses have dried up. So it is much more difficult these days for small business people to get loans.
Well, I certainly think there's capital available, but let's first break that question down. What capital? Where should the first dollar of capital come from in a small business? My answer is, as a banker, is out of your pocket. The first dollar of capital has to be from the borrower's pocket. That's the skin principle. Have I got skin in the game or not? That's what the bank wants to know. In tough times like we're in right now, will you fight for your business? Will you weather these storms and give it all you've got? And the way you do that is realizing, hey, I'm on the line too. If the bank loaned you 100% of your need, then there are two things that occur. You're over leveraged, for one thing, and secondly, you don't have skin in the game. So from our standpoint, it's pretty easy to say, well, we gave it a shot, it didn't work, sorry, here's the keys. And I'm not saying every borrower does that, but the more skin in the game, the more you'll stick with it in these tough times. From a where is it available standpoint, the SBA programs are still a very viable option for small business. The 7A program is a guarantee program that lends up to $2 million to owner-occupied small business. So you're in there running the business. The 504 program can handle a project up to $10 million or beyond, really. And then the USDA has some programs out there that are similar to the SBA 7A program for rural areas in the surrounding Knoxville area. Is it tougher to get financing now, like Sherman said? Yeah, it is, and the predominant reasons are anything discretionary right now. The consumer is saying, maybe I won't get this, but I'll get this. So there's kind of a selling down in the economy right now that I won't stay at the Hampton Inn, maybe I'll stay at the Best Western kind of philosophy to save money. So anything discretionary is going to be a little tougher financing opportunity right now.
In dealing with established companies that already have their financing, some of the things that I'm seeing are just a lot of nervousness in the market, in the local market, too. Not so much directly from the bankers I deal with, but from other professionals in the market. There's lots of speculation about what might happen with certain banks and how that might affect people's financing. And I have seen some unusual scenarios where banks have not renewed loans and things like that in ways that you wouldn't normally expect. So because of that, lots of our clients are, we're encouraging them to, if you're not best friends with your banker, become their best friend now, not in a sense of buttering up, but relationally, you need to stay very in touch with your banker. You need to make sure they have all information. The quickest way to lose your banker, in my view, is to surprise them with bad news. If you see bad news coming, which a lot of companies have bad news from their 2008 results, you need to talk about that in advance. We have lots of clients who have financial covenants in their loans, and if you expect that when it's time to calculate your covenants that you're going to miss one, you need to talk about that beforehand. A few clients I have that are struggling, there has not been great relationships with their bankers to date, and those are the ones that are the shakiest. So that would be my encouragement. Just make sure there's lots of free information flow. Get your bankers, your lenders involved kind of as business partners with you to whatever extent they will give you advice and help you with your plans, help you adjust things, take advantage of that, and get to know them really well.